Hey guys, what's up? Today we're going to talk about points and what they are. This is a very important topic nowadays with interest rates being higher than they've been in the last year. And so today I have Ryan Manley from Guaranteed Rate, and he's going to help us navigate this topic. Hey Ryan, so before we talk about points, what can you tell us about the Fed meeting yesterday and the increase in interest rates?
So the Fed raised the Fed fund rate yesterday by 0.75%, or 75 basis points. Bad for mortgages? Not exactly. So what the Fed fund rate is, it's a short-term interest rate. So stuff like your credit cards, line of credits, yes, they're going to be impacted, but it's actually good news for mortgages. And because they're trying to fight inflation by raising the Fed fund rate, bringing inflation down and mortgage rates as well.
Did you see a big change in interest rates from yesterday to today because of that increase?
We did. We've actually seen mortgage markets rally, which means the rates are getting better yesterday after the announcement, and then today, this morning as well.
So you saw the rates go down after the announcement, not go up.
Correct. Yep. So it's
Okay.
Biggest misconception is when the Fed fund goes up, mortgage rates usually go down. So good news here.
Okay, perfect. So now let's talk about points. So when should someone pay for points?
Yeah, so points, it really just means buying down your interest rate. We always say that the best rate isn't always the best rate for your situation. So let's say if I'm buying a house and I'm going to be in there for 2 years, I'm going to be getting a base interest rate. I don't want to buy down and pay extra fees up front to get that lower interest rate because I'm not going to be in the house long enough. Now, if I'm going to be in the house, let's say over 5 years, generally it makes sense to do at least 1 point. And we've got a calculator that'll do break evens if there's any questions about should you pay points or should you not.
Okay. So it sounds like for you to get points, the benefit is your interest rate's going to be lower, your monthly payment's going to be lower, but the flip side of that is you need to have some money in cash to be able to do that, and you can help a client or a buyer decide whether that makes sense or not, depending on the situation, depending on how long they plan on staying in the house. So that's great that you can help them with that decision.
You should always get guidance of what makes sense. Talk to your lender, call me with questions of whether points make sense or not for your situation.
Okay, so the flip side question now is when should you not buy points?
So you should not when you're going to be in the property shorter term. And by shorter term, we're talking anywhere between 1 year to 4 years. Typically, I recommend to clients not to pay points.
Okay, or maybe like if someone's getting a really good rate already and they can afford the payment, then why would you buy a point, right?
Yeah, exactly. And that's a good point, Joe, is, we may be in a situation where, somebody knows, okay, I might only be in the house a couple of years, but they're concerned with their monthly payment and they've got the cash to buy down the interest rate. It makes sense if that's really what you want. If your main goal is that monthly payment being low, it still can make sense with being in property shorter term.
Okay, so we've been talking about buyers and the benefits for buyers and the benefits that points have for buyers, but now let's talk about sellers. You mentioned to me yesterday when we were on the phone about a seller buy down strategy. What can you tell us about that plan?
Yeah, so it's one of the great strategies, especially in this market where we're seeing more price reductions. So what the seller buy down strategy is that you have the seller pay your points. So you can have them pay 1 point, 2 points. That's going to help your interest rate go down, your monthly payment go down. And this would be on a property where it might have been sitting on the market a little longer and you're starting to see price reductions. As a seller, you're actually better off to do the seller buy down strategy rather than price reduction. And we can get into details another time, but if there's any questions, always reach out to me.
Yeah, I like that. So I mean, this would be it sounds like a seller program, but it also benefits the buyer. So it's a win-win situation, obviously under the right circumstances. So yeah, if you have any questions, you can let us know on the video description below, or just comment, and we'll be happy to answer those questions as well. All right, guys, I hope you found value in this video, and hopefully you learned something about points. The most important thing is if you have any questions, make sure you work with a professional. Feel free to reach out to Ryan or myself, and we can both help you with any questions that you have. Thanks for watching.